Why not just invest in the S&P 500 or a traditional fund? Those are both legitimate investment options, but they're designed very differently. When you invest in an index, you're largely relying on one thing, that the market continues moving higher. But history has shown us that markets don't move in a straight line. Think about the dot-com crash, where trillions of dollars in market value disappeared as years of gains were wiped away. Think about the financial crisis of 2008. It devastated global markets, destroyed household wealth, pushed millions into foreclosure, and left families around the world under enormous financial pressure. Then came the COVID market crash just a few years ago, one of the fastest sell-offs in modern history, wiping trillions of dollars from global markets in a matter of weeks as fear swept across the world. These weren't once-in-a-lifetime anomalies. They're reminders that severe market downturns happen far more often than most investors expect. And when you're invested in a traditional index, you're generally along for the ride, whether the market is climbing or whether it's in a free fall. As far as traditional investment funds goes, they often require handing over control of your capital while giving you limited visibility into what's happening behind the scenes. Not only that, but over the long run, they usually tend to underperform the S&P, and that's not what you're looking for. 6 to 10% a year nowadays, with inflation rising, is not going to get you where you need to be. That's why Kingswell takes a different approach. Our performance speaks for itself. Over the last few years, our standard system has averaged 65% a year annual returns with a maximum of 5% drawdown. Meanwhile, our high performance system has averaged 120% a year annual returns with a maximum of 6 to 7% drawdown. Most importantly, your money remains in your own account. And instead of simply hoping the market keeps going up, our quantitative allocation framework can position for both rising and falling markets by taking long or short positions as conditions change. So we can profit regardless of what's happening. Every market position that we take is governed by disciplined institutional risk management, not emotion or speculation. This is backed by our CFA with more than 10 plus years of institutional experience. If you're an investor looking for an active management that outperforms traditional investments and is hands-off without giving up ownership of your capital, then this is for you.